Right. All right, everybody. Welcome to the session. A couple of shout outs here for all the folks there on the Zoom chat. Kristen, Lawrence, what's going on? Remy, Sim, Solomon, Tina, bunch of Tonys in the house, Victor's, William, Wayne. All right, a bunch of people. I see a bunch of chat members too. Good stuff, guys. I want to let you know Matt Maley was in the live trading room with some of his members. So we were waiting for him, but it looks like he's already here in the house. I want to give you just a quick intro of what we're going to do. We're going to be talking about trade ideas, education, setups, market events, what we'll be looking at, what Matt is looking at as a chief market strategist, upcoming, right? Not just in the economy, but in the stock market as well, and how you can trade and profit from all the volatility and all the crazy stuff that's going on out there. So without further ado, let's go ahead and bring on the man himself. 40 years in Wall Street, chief market strategist at Miller Tabak, and lead trader at the Benzinga Stock Picks Inner Circle chat room, Matt Maley. Let's go ahead and make sure all is good here. So, Matt, can you hear me there on your side?
I can hear you, buddy, but it's, am I on? There we go. Good. There we go. Host will start your video. Start my video. I think we're all set. Great. Thanks. Sorry about that, Rodrigo. How you doing?
Doing well, man. Doing well. A lot of things happening now in the market, Matt. So I'm glad that you're here with us. I know you're a busy fella. Being out there. For those that don't know, a lot of you guys already know Matt because you see him on Bloomberg, CNBC. But Matt, well, I'll let you go ahead and tell them if you can just give us a brief introduction of your 40 years of experience in Wall Street.
Yeah, I in fact was on CNBC yesterday morning, very early, 5 a.m. Worldwide Exchange. But I'll be on in the 2 o'clock hour. I don't know the exact time on Bloomberg TV tomorrow. So SFYI, so you look for me there. I'm just talking about the general markets. So my background. So what the heck? Why would you care about what I've got to say in the marketplace? Well, as Rodrigo said, I've been 40 years on Wall Street. The market has been. I'm sorry, but my career has been different than I'm a strategist. Is that when I go on CNBC and why they seem to and Bloomberg and Yahoo Finance Network, et cetera. Because they seem to like what I have to say and find it compelling. But I have a very unique background as a strategist. I'm not you're not a normal guy who used to be an analyst or economist or such. I'm a former trader. I spent the first 25 years of my career trading, and I covered the trading desks of some of the biggest institutions in the business, whether it be the biggest mutual funds, like Fidelity, the biggest hedge funds like BlackRock, insurance companies, banks, et cetera. And when you do that, you don't just learn what the theoretical stuff is that's going on in the marketplace. You learn about what's, in other words, we don't care. They care about more about what should happen. I learned very quickly in the trading area about what is happening, what's going to happen, not what should happen theoretically. And it's just helped me to see different things. I mean, but one of the things that I always try to say is that the market, these people always say the market's always right. I mean, the market's always right. Well, that's ridiculous. The market's wrong all the time. The market is always right, but it's only always right eventually. Okay, and was the market right at the beginning of the year? I mean, the Fed was about to completely shift their policy, and I was pounding the table saying this market's going down, and most of Wall Street was saying, no, look at this. The Fed doesn't matter. The economy's still strong, and they couldn't have been more wrong, and they've been sucking wind ever since. But the point is that that's what I've done. Again, when we're talking to all these trading desks, looking for, I don't care what the long-term picture is on this stock. I mean, there's been several times where, for instance, earlier this year, I mean, I turned very, very bullish on oil almost 2 years ago. But at the beginning of last month, the beginning of June, I was like, hey guys, whatever's going to happen long-term, and I still bullish longer term. I said this group is way overbought on the technicals. The sentiment is way too bullish, and the positioning is way too long. Too many people are owning these things. There's nobody left to buy. We went negative on the group, and we were able to go into the XLE put options the XLE, which is the ETF on the energy stocks, and make a really nice
Right.
there. So the point is, I try to take the fundamental aspects, which are very important, take the technical aspects, take my experience, certain weird what do you call them, correlations that a lot of people don't realize exist out there. Hold on a second. Hello.
Right.
I am. Yeah. Yes. No. Yes. Okay. Bye. Sorry about that. I knew that call was going to come. I was hoping it was going to come right before 6:30, but I knew I had a quick yes or no, so I apologize. But the when the boss calls, when the boss, I'm talking about my wife. She had a good news. But all seriousness, again, I take fundamental stuff, experience, and put them all together to see what's really happening in the market, and also educate people on what really works in the marketplace. And it's worked out to make some incredibly profitable trades this year with all this volatility.
Right. So, I mean, this is the thing, right? For you guys that don't know Matt Maley, I mean, you pretty much Matt goes over, you understand global markets. And I know that you've been able to make some really good trades just out of understanding other, I guess, like the China trade, the FXI trade that you made, or even with the meme stock with the Viacom when that was, so these are all pretty much trades that, because you're watching all these markets, I guess that's really good to have that, right? Because you have the trading aspect and you have the strategist aspect, right? I guess that's what you were alluding to.
Exactly. That's the whole thing. Is that, again, you got to know the fundamentals. So, for me to say, these people look at only the fundamentals are a bunch of rockheads. I'm not saying that at all. They're very smart people, but and for the longer term stuff that you're trying to do, most people have that certain bucket, the bigger bucket, where they have that long term 3, 5, 10 or 10-year horizon, maybe even 30-year horizon, depending on your age. And that's fine. But if you really want to maximize your returns, you can have, and you have the time and interest to trade a little bit more actively, you can really take advantage of when the market sees these wild swings, especially in a time like now where the volatility is very high, and because we have the tools, which we didn't have until now, for individuals to take advantage in both directions. Okay. And, we've always been able to take advantage on the upside, but not so much in the options market. It was hard. You could, but it was hard. Because all the options were all, quarterly options. Now we have weekly options on all the big stocks and many of the mid-cap stocks. We have 3 times a week options on all the indexes, the S&P 500, the QQQ, which is the NASDAQ, et cetera, the IWM, which is the small cap, Russell 2000 small cap. So we have all these other tools. Plus we have ETFs. We have inverse ETFs. We have leverage ETFs. All these tools that we didn't have. We had them a little bit in 2020, and we had them in 2018, the last time the market really got volatile, but they weren't as liquid as they are now. And before that, we didn't really have them much at all. And so now we can take advantage of it. And my point is, we can take advantage of it when things are going down, which you hadn't been in the past, but we can also take advantage of it easier when we see upside movement, because in the old days, it's like, hey, I like Microsoft. I think it's oversold. It's going to go a lot higher. Oh my gosh, their options just expired 2 weeks ago. I think it's going to really rally here over the next 3 weeks or next 2 weeks. But I've got to buy options way out in September or October. There's a lot of time premium that's built into that. You have to spend so much more for them. Now you say, no, I think it's going up the next 2 weeks. I'm going to buy the Microsoft call options that expire 2 weeks from now. And they're much cheaper, and therefore you can make a lot more money with your right calls. So it's with the right plays, I should say. I hate to use the term call because you see puts and calls. But, anyway, so it's worked out. Like I said, it's not just this. We kind of have this. We talk about perfect storms in a bad way. This is a perfect storm in a good way, where we have incredible volatility, but now we have the opportunity and the tools to deal with it. And that's why it's working. It's worked out so well this year, and I think we'll continue to do so the rest of this year and beyond.
Right. And what I do like, Matt, is that you're able to trade both ways, right? Meaning that you can either trade on the long side or the short side. And, just the way that you do it, it's really a lot easier because you also practice a lot of risk management. I know that that's something that you discuss sometimes in the chat room, when it's such as maybe this is a small position, I'm making this position a little bit bigger, or I'm decreasing, I'm selling half. You're always
Right.
pretty specific with your entries. That's what I'm showing you guys in the chat room. Pretty much, this is a chat room that only Matt only Matt can post, and he's posting his entries, exits for the specific contract expiration, entries, exits, right? So you're always trying to help provide some education, right, Matt? I know that you're a bulldog for trading. We all know this, but you're pretty hard on the education as well, like what's happening in the markets, what's happening
Right.
with the Fed, explaining this to people, right?
Exactly. I mean, one of the things, it's kind of a funny thing that happened today with which people, sometimes they look at some of these correlations, they think, oh my God, you're out of your mind. But some of them don't make sense. But I say, hey, listen, I show how they work. For instance, when oil prices go down, it's actually not always a great. It can be, and not always a great thing for the airlines. Everything's, oh, oil prices are down. That means that their fuel costs are going down. Well, yes, but it also means that usually means that the economy is going south, and therefore fewer people are going to be flying. So there's all sorts of different things that go in there. And the one that happened today was this thing about there's a plastics index that I follow, and plastics are used as even though chips are really small. I follow this plastics index to give me an idea where the semiconductor stock's going to go. And that thing recently fell out of bed, so I'm worried about the semiconductor index, even though they've already fallen quite a bit. So these are the types of things that I'm constantly trying to talk about. Look at correlations. Look at some of the rules that people think are like I said about the market always being right, which is ridiculous. And just talk about sentiment things. How when sentiment is gone from really bearish and suddenly it's getting bullish, it's moving. That's good. But then when it gets really bullish to an extreme, it means there's nobody left to buy, and it's actually a contrarian indicator. Things like that. But also, what's going on in the bond market. The bond market. I'll give you another example. The bond market. It's important to know that it shifts, not very often, but it shifts from being something where lower interest rates are usually very, very good for the stock market. Lower interest rates are good for everything, right? But sometimes interest rates are going down because everybody's buying treasury bonds because they're scared to death of what's going on in the marketplace. In other words, there's a flight to safety because treasury bonds are backed by the full faith of government, full faith and credit of the United States government. So when things get really dicey, like in 2020 during the pandemic, and recently a couple times this year, they've got, oh my God, things are really getting nasty. I'm going to go buy treasuries. So then what happens, of course, interest rates, when prices goes up, when in the bond market, interest rates go down. So the fact that interest rates are going down was actually negative because the reason they were going down is that everybody was scared to death, and obviously during the pandemic for obvious reasons. So these are the types of things we're constantly trying to talk about. And we have this thing that we had today, and geez, I went almost over an hour today, but we have a Zoom call every Tuesday at 11:30 a.m. Eastern time. And we started off and thought would be something we'd go 20 minutes or something, and just kind of I'd spend a few minutes talking about one educational thing, and then we'd move to what's going on in the marketplace and everybody's some of the favorite picks that are taking place right now. And it's kind of morphed into a bigger thing. Like I said today, with all the stuff going on this week, with the inflation number coming tomorrow, earnings season starting on Thursday and going into the coming weeks. We had a lot more to talk about, and we're on for a whole hour. But again, had a lot to do with a lot of educational things. So, I mean, just coming in and saying, "Hey, I like the stock. You ought to buy it, or you ought to buy this put option because I don't like the stock." Well, that's great, but why? I mean, why? I mean, why do you say this? I mean, that's really important.
Right.
It's important to learn to why you're doing what you're doing. I mean, not just to blindly follow somebody.
Right. And I know that, look, in this day and age, just in general, right? Just understanding what's going on with news and what to trade. I guess for people that are new trading, Matt, it's very easy to just maybe watch, headlines on whatever news TV channel, whatever you got on. And ultimately, what you're doing here is something different, right? Like you're pretty much working kind of like on a group trading session. Is that correct? And that way, I feel that you are able to provide them clear, concise information about what is happening without any spin, if that makes sense,
Right.
from the news cables out
Now,
there.
these things come around and talk about, oh, I hear all the people are going to try to squeeze the short, the meme stocks are going to squeeze the short. That's not what we're trying to do. These, you get some of these chat rooms and there's tens of thousands of people on it, and all they're really trying to do is figure out, is try to manipulate you to buy the stock or buy the stock. Maybe they bought some calls in the stock and they're trying to move it higher so they can dump them, the old pump and dump, or they can spread bad rumors about a stock that they're either short or have a put position on. And a lot of these hedge funds, we have people that actually go on these sites and claim that they're just some person from middle of nowhere that really doesn't know what they're doing, and then they go, oh, I heard this, but and then suddenly they get a couple other people to jump on the bandwagon, and the whole thing starts to move. And all it really is them trying to they front run you by putting out a position and then trying to push it the other way. We're a very small number of people, and I don't deal with rumors. I mean, I once in a while I say, hey, this stock is up because there is a rumor. Okay, I'm just stating a fact. Yes, there is a fact. There's a rumor out there that such and such is going to be taken over by Microsoft. That's the reason. But I'm not saying that what these other guys try to do is like, hey, I hear that Microsoft's trying, the rumors are going around, and they're trying to get you to move the stock up. I usually say, hey, that's just a rumor. I have no idea what to do about that. I don't have any inside information. I tend to shy away from those things. I deal with what's going on and what I think is going to go on in real time, not stupid rumors about, I say stupid rumors. I mean, people made a lot of money off it in 2021, putting on short squeezes. But that's not, that can only last so long. In today's markets, you have to know what's really going on and use the real tools that traders have been using for decades, and new tools that we use that can work in a consistent way. Now, of course, nothing works perfectly. We don't have anybody who says their batting average is 1,000 is lying. And as I've said many times, you don't want to be batting like a major league. If you're a major league all-star batting 350, I mean, they pay you hundreds of millions of dollars to bat 350 in the major leagues. You're only batting 350 in the stock market. You're not doing very well. So, but we're not going to bat 1,000 either. And the whole idea is to get a lot more winners than losers. And not only that, is that the winners get you a lot more. And that's we should probably go over some of the trades that show that we've had. Believe me, we've had some losers along the way, and we will continue to have ones that don't make money, and even lose a little bit of money. But the point is that we're trying to we've had a lot of, with this huge amount of volatility right now, we've been able to make on a fairly consistent basis some real big moves. I mean, we made some that Rodrigo talked about where we made literally over thousands of percent, not just 1,000%, of thousands of percent gains. But we've also had on a regular basis many that have been 80%, 200%, 400%, 150%, whatever, that have worked out very, very well.
Matt, you want to just share your screen so that you can show them?
Okay, let me just, oops. What happened to my share screen? Hold on. Shoot. For some reason I can't.
Yeah, it looks like a couple nice trades on the wheat call options.
Yeah, I'm trying to get the wheat. I can't share for some reason. Is there how I did that? What I do? I'm. Let's see here. Nope. Can you see my screen right now?
No, not yet.
What the heck? Okay, I'm not, technology is not my game, so I'm just trying to.
It's all good.
Find the thing that will give me that.
I think I need to stop sharing here. 1 second. Let me see if this works.
Oh, what's going on here? I may have to. Usually there's just a bar right at the top of my thing, and I don't see it, so I don't know.
All right, try it now. See if you can pretty much stop sharing there. So. Okay, I think Matt is just logging back in there. Audio
I
is
caught
good.
myself off there. Sorry, everybody.
You're good? Yeah.
Okay. Now can you see me? I got disconnected there. My fault. I just
Yeah.
shared the screen. Can you see it now?
Yeah, I can see we can see the screen. It's all good now.
Perfect. Perfect. I apologize there, guys, guys and gals. Let me just pull up my my thing here. Okay, now we said we talk about what Rodrigo was talking about. Excuse that little hiccup there, technology wise. I've been 40 years in the business, which means I'm technology wise. I'm not as believe me, I keep up to date on all the markets. But I always joke with that the people said, how could you have had kids if you don't know more about technology? And I say that's why I had kids, so they could teach me about technology. But in all seriousness, we had one of the things that Rodrigo talked about is that we have this a situation where there we go, situation where we don't just talk about stocks. We talk about all sorts of different things. We talk about we've made a boatload of money on a trade in the Chinese stock market. We make it on commodities. We've made it on the dollar. We've made it on oil, etc. We want to make whatever there's. If there's something going on in Europe, we can take advantage of on an ETF there. We want to be able to take advantage of it. That's why some of the things that have worked out really well. Now, whoops, let me get further. Okay. And there we go. Okay, now I'm going to blow this up so you can see it a lot better. And share done. Okay. Okay, there we go. Now, this is what happened in wheat. Okay, I'm going to go back. Hold on a second. I'm going to go like this. You can see those. For a second, before we're going to talk about wheat. Here we are as my Bloomberg machine. I'm going to show you what I was talking about. I went to the commodity, wheat, the commodity. And people are going, what? I mean, how can you make money in trading wheat? Well, I don't trade wheat. What we did was we traded a wheat ETF. And so what we did is look at this thing that I saw in wheat. This is the chart on wheat, okay? We call it a relative strength index chart, okay? Look how oversold. Now, what you see here is a chart on wheat, and I'm sure you've heard about how these crazy things that happened. Well, obviously with the what's been going on in Ukraine with the war there. Some of these crops have been absolutely just went through the roof earlier this year. Well, sure enough, wheat went straight up like this. And then it came down. It came down and basically crashed for all practical purposes. Now, what this was down here. I looked at the relative index chart, RSI, and this you can see whenever it gets oversold down into this green line. The green line is there because it tells you, hey, it's getting oversold. Green, go ahead, buy, go. And then when it gets to or above the red line, I mean above 70, it's stop. Don't buy any more up here. Okay, you can see how far above it got there. But when it got down here, I was like, oh my God, we're going back. You actually went back several years. It hadn't been this oversold. So I said, okay, wheat has become ridiculously oversold. And I also have this thing where I look at they have these surveys of whether people are bullish or bearish. Well, they have one for the futures traders. And in the wheat contracts, people, the level of bullishness had dropped to just 5%. Anything below 20% is considered overdone. It means that too many people have become bearish. Below 10% is really bearish. All the way down to 5% was ridiculously bearish. So I came in and said, okay, now how many of you guys trade wheat? And of course, nobody raised their hand, although I shouldn't say that. Some people actually had traded some wheat. I had never traded wheat, but we did have an ETF, WEAT, okay? And so, and just so you get up the description, I can pull up the description for you. So here it is, wheat. It's a wheat fund. It's an exchange traded fund, an ETF. And it basically takes three different futures contracts for wheat in the trade on the Chicago Board of Trade, the CBOT, and they combine them for this ETF. Well, look how oversold this ETF was. Okay, let's see, it's wheat up here, WEAT. That's the symbol for the ETF. It got very, very oversold. So we came in and we bought call options. Now, and you think, and I'm going to show you that in a second, just hold on. You see, hey, well, it's all a bounce. That's not much of a bounce. That's a 14% bounce in just a couple of days. You can make a lot of money when something bounces 14% in just a couple of days. So I used, well, be honest with you, I also liked longer term fundamentals. I felt that the wheat, because what's going on with the war, it's a war of attrition, that the wheat had gotten way oversold on a near-term basis and was going to bounce back because the fundamentals are still sound, because simply there's not going to be enough supply of this stuff. So what I did, and again, let's go back to what I was showing you earlier. Pull this up. Boom, boom, boom. And here's what we did. And again, what we do is we come in with specific trades. I don't just say, hey, you ought to look at wheat here, go long, buy some. No, we came in and give you exact wheat. We came WEAT. We give you the exact expiration date, July 15th. The exact, we call it strike price, $9, call options. Okay, we bought them on July 6th, right in here, okay? Then when it opened up higher, it was 2 days later, we held them for a couple of days and they actually went down a little bit. It's like, oh, people are getting a little nervous. Then they went up. Should I take profits? I said, no, we got to hold on to these. They were so oversold, they're going to last longer. Sure enough, when they were up 100%, we sold half. And the reason we did that, don't always do that, but frequently we do, because once you sell half, just think about it. You buy something, you buy 2 options and you pay $50 for both of them. And the 2 options go to $100, okay? It doubles. Well, you sell one for $100, you've covered your costs. Now you still own one, and even if it goes down, you're going to make a profit. You cannot lose, okay? So it's good risk management. Sometimes if we really think it's going, we let it go. But in this case, we sold it here, and then as we got towards the middle of the day, I said, okay, this thing's had a great run over a very short period of time. Like I mentioned, 14%, and sure enough, wheat, we sold WAT for a 250% profit, okay, in 3 days, in less than 3 days, actually. So see how well this really worked, and that's what we're really trying to do, okay, all the time. And now look what happened to wheat. Let's look at this. See what happened here? I'm going to pull this back up. I'm going to zoom in on it. This is the stock. This is the ETF. I'm going to get rid of these lines or moving averages. I'll get rid of those. Well, look what happened. So it went up 14%. Look what it's done the last couple of days. Bang, it's just fallen out of bed. And those options are now worth, I mean, they're probably down 90% from where we bought them, but we've already sold them. And so, again, risk management, it was like, yeah, did we get them at the exact bottom? No. Did we get them at the exact top? Nope. We made over 250% in 3 days. So these are the types of things that we're looking for. Now, believe me, I do focus on U.S. stocks and U.S. Index ETFs and such. But when the opportunities present themselves, we like to do them, and we like to do it wherever we can make the money. Another one we did just recently, just this week, was in the TLT. Excuse me. Whoops. What did I do? There we go. The TLT. And again, I'm going to blow it up so you can see it better. Here's the TLT. Now, the TLT is the Treasury Bond ETF. Okay. And remember, as Treasury prices go up, yields go down. And so I really thought that the TLT was funny, because I had a nice trade on last week. We made money on the calls. A bunch of people took some nice profits. I held on to mine, and that didn't work out too well. So people in the chat room, like I said, people do their own thing. Like, hey, I've already made over 100%, I'm out. Or sometimes I made 50%, I'm out. I held on, but then when it came back in, I said, did I get afraid? No. I came in and I doubled down, because I knew, for again, looking at the technical aspects, and especially on the sentiment side, we went in and we bought them again. And we bought the TLT July 15th, $115 calls. We bought them right here before noontime, okay, on the 8th. And that was obviously on Friday. And this morning, when it was up 284%, we sold them just after the opening. Now, I didn't get the high. If I'd held on a little bit longer, we would have made more. I don't pretend. And again, I didn't get the low. I got it here. And then when you're making 208%, if you're going to beat yourself up or beat me up for not getting it right to the high, you're going to drive yourself nuts. It's impossible to do that. You take your money and you run. But the point of the matter is on these things is we really try. Whoops. we really try to be able to do it on a consistent basis. So, there we were on the wheat. So we did that in July, these July plays. Last week on the XLE, what do you call it? The crude oil had gotten oversold. And so I said, hey, let's go in and buy the XLE, which is the ETF for the energy stocks. Let's go in and buy the July, again, the XLE. So I tell you exactly the trade. XLE, June 30th, that was the expiration date. Again, we bought them on the 27th. See, you can see down here, the day we bought it was the 27th. About the June 30th, $74 calls. Boom. We made 108. This one we got, that shouldn't, I didn't get the exact top, but it was very close, okay? We got, it should have been drawn to like about 182%. But the point is, we got it right there. And again, we made it so quickly. It's like, oh my gosh, I expected to hold on this for a while. But I said, we're already, it's early in the morning. The first hour of trading can be real tricky. We've made 186%. Oil was very, very overbought a month ago. It's going to take a while for this to kind of work through. So we went ahead and took the profits. But again, whoops, went the wrong way. And this is to show how we did it earlier. As I say, making money in both ways. Okay. Now, one of the things that I had talked about was how I was very, very bullish back in October of 2020 when everybody was negative on energy stocks, and I was pounding the table saying we got to buy these. Fundamentally, fundamentally, there's no way we can produce any more energy. The supply side of this is never going to keep up with demand. Number one, and that was before the war. Of course, that was long before the war. Number two, everybody was underweight the group. Everybody was bearish the group, and all the big institutions were wildly underweight the group, and was pounding the table. Of course, the group rallied strongly for the next 2 years, but a couple of times during that time, well, actually, say 18, 20 months, I have pulled back and said, let's back off from this group. And this is exactly what we did in early June. Okay, so we came in and we bought the XLE June 17th. That's the strike. That's the expiration date of the options. Well, you can see where we bought them. We bought them on June 8th down here, the $90 put options. And the same thing. We came in, we held them. They had made a nice little rally. But from what I was looking at, I didn't want to take profits yet. Some people did take some profits early on. That's fine. Believe me. I give ideas. I'm not your the people's investment advisor. I'm just giving you where and I tell you exactly where I buy them. If this is exactly where I bought it. I didn't buy it here and wait 2 hours to say, hey, you ought to buy it. I tell you exactly when I buy it and exactly when I sell it. Okay. And so I came in, and then 2 days later, again, I was like, geez, they still have a couple more days before they expire, but we've made 560%. I was like, I'm not that. Sometimes I'm like, I'm so sure it's so ridiculously oversold that it's going to go a lot higher. This one, I wasn't that sure. And when you make 500%, 6 times your money or more, this is in just 4 days, you got to take the profit. So I sold half. Now here's a situation where I sold half here and I ended up selling the other half lower, but you can see this 470%. So my average in the middle is somewhere about 500%, a little over 500% return in just several days. See what happened here? But I knew it's like, wait a minute, there's no reason for us to sell it that much. We held off, and sure enough, but the very end of the day, I said, we got 500% combined. Let's get out of these things. And that's what we did. So, but just to go back to see here, we bought the calls, the June calls at the end of the month. Earlier in the month, we bought the puts. You make it in both directions. And that's the thing. Again, like I said, these XLE, these ETF, big liquid ETFs, they have options that expire every single week, and then we're able to take advantage of it. Now, here's another one where, again, I try to show here by giving you all these examples is that we do it on a fairly consistent basis. In other words, it's not once a month. We've done it, several times a month, and usually once or twice a week, which is great. And again, and of course, I'm showing you the big trades. We've had ones where you just make 50%. That's great. But I think about how many times do you make 50% in a stock in 1 week? I mean, you can make these, especially when we're in this high level of volatility. And I try to keep it very simple. I talk about puts and calls. Once in a while, I'll do a strangle or a straddle. But I'm a trader. I'm not I didn't grow up as an options expert. I grew up as a trader, picking key points And so we use simple puts and calls to do it. There are other people, and there are people, plenty of people in our chat site who do condors and all these different things. I don't, for the purposes of this chat room, we stick to puts and calls. Once in a while, we'll do straddles and strangles when we see, like today, we did a strangle, which is buying a put and a call on the same thing with different strike prices, the same asset with the same expiration date with different strike prices, because we expect tomorrow is going to do one thing or the other. The CPI number, the big inflation number comes out tomorrow morning. That should shoot it one way or the other. If the market does nothing tomorrow, I'm going to lose on both sides. That's why you don't do it very often. You have to be pretty sure that you're going to get some sort of a big move, and that's why we made that play. But getting back to what I'm talking about, again, here was early. Now here's we're talking about mid-June, the SQQQ options. Now the SQQQ, what that is the leveraged inverse ETF for the QQQ, the NASDAQ 100. Okay, so in other words, it's inverse. So by buying calls in an inverse ETF, we're actually making a bearish bet. Okay, and so we came at the end of the day when here in the early off in June. Again, you don't have to wait when you make big profits. Why would you wait to expiration? You make your profits, get out, and go. Okay, and this is what we did. Again, same thing where we bought it in the morning. The market fell hard the next day. We made over 200% by mid-morning, and I said, okay, we're going to take profits on half. And then again, at the very end of the day, just before it closed, it was up to it, and I go, geez, I think the market could fall further. But when you have 200, again, between the two, we had an average somewhere around 240% in just a day. We're going to take those profits every time, and well, almost every time. We'll always take some profits. In this case, if I had really been sure about it, maybe I would have held on a little bit longer if there was some sort of news or some sort of compelling thing. But that's not what we did there. Oops, I did the XLE. And here's some QQQ, similar thing here, where this was at the same time. Okay, this is the same time. We bought the QQQ options because they expire 3 times a week, Monday, Wednesday, Friday, and we went in and said, okay, this market, it was way overbought. There was no reason for it. Remember how the market was getting hit so hard the first half of June, and we saw one bounce, and I'm like, nothing's changed. This is a short covering rally. Now, this is not something we do very often, but it did work out. At the very end of the day, we came in, we bought the QQQQ, June 13th, 285 put options, because it was just the next day, and sure enough, sold them for $5. The next morning, the market had just gotten hit hard. I said, 500, we're made over 500%, we're out, okay? Now, we almost got the exact bottom that day. If I'd held on longer, we would have made a lot more money. But I can't, again, I'm showing this because I want you to admit that if I were to claim, I get the exact top, exact bottom, you can't lose it. That's crazy, and that is going to happen. And great if somebody, but I just thought 500% that quickly. It was just risk management. It's so important to use risk management and trying to get that last ounce out of every single trade. And with this kind of volatility in the marketplace, there's a lot of these trades. And again, I did that again. Again, some more SQQ. Here's another one, advanced micro devices. This was again going back to the very beginning of June, just trying to show that we do this on a fairly regular basis. This is a specific stock, right? Again, we do wheat, we did the treasury market, we did some index ETFs. Now we're looking at individual stock, and the stock AMD would become oversold. It was interesting because people in the site had made some trades at AMD that I liked, but I didn't participate in. That's one of the key things we like to talk about. Is there are ideas in this chat, in this website, or sorry, in our chat room that they're not just my ideas. I always tell you exactly what I'm doing. I don't make a trade without you letting you know. Okay. However, there are people who come in and say, "Hey, take a look at this. Take a look at that. I like this." And these are one of the ones where I didn't jump on. Well, the next opportunity came up, I did jump on it, and sure enough, it bought the AMD calls, but the thing was so oversold. It went down, and I was like, I was still confident this one would work. And sure enough, it rallied back the next day. By midday, we had made 146%, and that was the next day trade. And again, it went a little bit higher after that. I didn't lose any. I did not get mad at myself. I didn't lose any sleep over it, etc. Amazon, this was the other one that really stood out because this was a great trade, and yet I didn't make it. I just like boom, boom, punch myself in the face, right? a woman, a person came, a woman happened to be a woman, but it just doesn't matter. We have a great group of men and women in the chat room. We have a lot of fun with each other, kidding each other around, busting each other's chops. It's a lot of fun. But more importantly, helping each other all the time. Hey, I like this. I don't like that. Hey, be careful of that. Be careful of this. But here was a situation where she realized and went back and did her work and said, hey, every time a stock splits, the last time the stock split, it skyrocketed higher the week leading into the stock split. I went back and said, hey, that's really great. I looked at all the research and said, this is a great play. And I just had this weird gut feeling. I didn't like it as much as she did. Well, she jumped in, as did several other people, I think quite a few other people in the chat room. And the next day, they made 550%. I know many of them held on. Now, again, I put it right to the exact top. I don't know maybe people did hold on it that long. But I know they bought it in here at the end of the day on the 27th. And as we got to early June, they sold 1,500%. It was over 1,000% that they made. And I got nothing, as said in Caddyshack, you'll get nothing unlike it. That's what I got. I got nothing but people in the chat room. So just trying to show you that. Now, this was the Viacom. Again, I don't want to go over too many different things, but I do want to show a couple of things. This was one of the bigger ones. And again, we try to combine a lot of different things. And this was a situation, Viacom, which is now Paramount, but Viacom, remember we talked about that RSI chart? Look at the RSI chart, how every time it got overbought, the stock would sell off. See, it got overbought there, sold off, got overbought there, sold off, got overbought in here, sold off. Look how ridiculously it got overbought here in 2021. And I came in here and said, we're going to go in, we're going to buy the puts in this name because these guys aren't solving any world problems, okay? They're not going to come up with a new chip to solve, cure cancer, whatever it's going to be. So we bought it the next day, the stock dropped 64%. It was in the middle of the meme craze, okay? And we made 5,000 times, 5,000%, not 5,000 times, 5,000%. Actually, sold 2,500%. I said sell half of 25 when it was up 2,500%. And then the other half at the very end of the day said, anybody owns this thing now ought to get out. Now, I must admit, if you had held on after that, you would have made, I guess you would have made, and people said that they made over 5,000. This was before we started the chat room. But it was something where I was working on my tier 3 a newsletter that we talked about, and people, I couldn't verify it because it wasn't in the chat room. We didn't have the chat room at the time, but they said they made over 10,000%, and theoretically they absolutely could have. So there was every reason to believe that they told the truth. Now, the other, and the other one was the big one we made. Again, we've talked about different things that where we like. What is wrong with this thing? Okay, great. Let's go back here. I talked about, we did all sorts of different markets we've done. We've already talked about, we did the QQQ, the SQQQ, the TQQQ. You could also do the SPY and those. Individual stocks like Advanced Micro Devices and Amazon, other markets like the Treasury market. But also we do, here's one we thought was really the best one we ever had. And this was the FXI, okay? This is the China large cap ETF. Now I'm gonna pull it back up so you can see it better. Enlarge it, there we go. This was, now forget about this. This is a chart obviously I made in March. So it said last weekend's chart. It's not last weekend's chart. It was last weekend's chart in March, okay? But all the other things are accurate. Here's where the stock was trading. Again, this is the ETF for the Chinese stocks. And what was happening? See this big decline all the way. They were just killing the market. Why? Because they felt that they kept cracking down every single month. It was a different industry. Started with Alibaba and Jack Ma. Then they went to the gaming industry, and then they went to the education industry. Every month it seemed to be one after another, and it's just getting pounded. So the fundamental outlook was bad. And then they came in, but and I knew it was bad, and I was bearish on the group all the way down. But then in March, all these stories started coming out about how the SEC was going to delist a lot of the Chinese stocks in America. And the stock and the FXI just fell out of bed. Well, look how oversold. And as I mentioned, on this chart, there are other things we look at. We look at Bollinger Bands. Obviously in the technical analysis, we look at all sorts of different patterns, whether it be descending triangles, head and shoulders patterns, etc. But this was one where the RSI chart got so oversold, the most oversold ever, ever. Okay. And I said, okay, this has got to be. So number one, when something gets that oversold, I don't care how bad the fundamentals are, this is going to bounce. But number two, I also know how China works. Okay. They're not going to let their stock market fall out of bed. They're going to come in and buy it and make sure, they're a communist country. They can do whatever they want. They're going to make sure this thing's going to bounce back. So I said, okay, let's get in there and buy the FXI calls. Okay. And sure enough, the next day, 27% rally. Actually, it was 27% rally the next day. This chart was grown to 2 days later when it was up 27%, but it was up 25%. This is like the S&P or the Dow Jones Industrial Average rallying 25% in one day. That's what we captured. Okay. And what we did is, whoops, keep going the wrong directions. Here's what we did. In the morning, we came up, the thing opened more than 1,000% higher, our options. Again, I went in, we said, let's buy the FXI, March 18th, $30 calls. It was up almost 3,000%. No, it opened up well over 1,000% higher. And I said, no. Usually I would say, let's get out. But I knew that this is something that the Chinese government had to hold on to. I mean, they were going to push this thing higher. This was not going to be a one-day wonder. It wasn't going to be it is going to just roll back over like we see in our markets a lot. And then they slowly move higher in a stair-step fashion. And so we sold half, but I did wait a little bit. So after at 10:30, I was like, okay, wait a minute. We're up almost 3,000%. We got to take some profits. So we sold half right there. Then I said, but do not. And they said, well, should we sell more? Should we sell more? And I said, no. We're going to fall. And right to the end of the day, and finally I said, I think this thing's still going higher, but I got to get out. Almost 8,000%, 7,850%. We sold on that. There are people who did hold on for another day or two, and some made well over 10, 14,000% is what they said they made. So, I mean, these are the kind of, it's 100 times over 100 times your money. That's crazy. I mean, and again, Viacom was 2021. This was 2022. I hope we get another one like that this year.
Right.
I hope we can get one every year. But I'm not trying to claim we get these kind of plays all the time, but we do get them every once in a while. And hopefully that gives you an idea of what.
Yeah, and
what we can do.
it's really good that really to show all of the sides that you put into looking at these trades, Matt. Even if it's in China or a meme stock or the general indexes. But I'm getting a lot of emails here from the folks about questions about the live trading room, Matt. So we're just going to go over this really quick, and then
Good.
we'll get back here into the session here. Okay.
Sounds good.
So thanks a lot for sending these questions. These are from you, the viewers, at this point, and we'll just go over this really quick. Does Matt Maley go over member trade idea suggestions? Yes, that's something that it's a back and forth communication. Matt will be communicating with the chat room on a daily basis. Are the sessions on Tuesday recorded? Yes, they are recorded, and they are available for the Inner Circle members. Does everybody that joined get a free laptop? Yes. What is the chat room schedule? That's Monday to Friday, 9 to 5 p.m. Let's see, is there a money back guarantee? Yes, 7-day money back guarantee. And the price at renewal will be the same as today. It's 70% off till midnight. Until midnight, you have to use the link that's on the description or post it on the chat. That's the only way that you can get this deal. And you will get 2 bonus items if you sign up before midnight as well. So that pretty much covers the questions here I have now. Matt, now let me ask you a quick question here. Now that we've gone over some of those trade ideas, some of those setups, we got John Moore in the house. What's going on? I want to give a big shout out here to Maury. Welcome here to the Stock Picks Inner Circle chat room, our most newest member here from this session.
Thanks for joining. Great to have you here. And I tell you, you're joining at a good time because we are going to, tomorrow we get a CPI number. Thursday we get the PPI. Again, CPI is Consumer Price Index, so it's a key inflation number. Friday is the Producer Price Index. I'm sorry, that's Thursday. And we also have the real start of earnings season, led by JP Morgan and several other banks. And then literally the next couple of weeks are going to be, the markets should be volatile, but a lot of individual stocks are going to be very volatile with these earnings reports. And with right now, everybody's worried about earnings estimates having to come down. And when that happens, it's going to have all sorts of implications for the market. So it's going to be a very, very exciting couple of weeks, at least into early July, at least into early August.
Right, Matt. So let me ask you a couple of things. I mean, you've seen what's been happening with crypto. You saw what happened with Luna, and then with this Celsius or some company like that that basically, froze their account. So if you had any crypto, you had any Bitcoin, Ethereum, whatever it is, it's pretty much locked. You're seeing these platforms, right? Going bankrupt, basically, right? So what's going on with crypto, man? What are you hearing? What's going on there? What's the talk with the big boys there? On them?
Well, it's going to be, let's just pull up a Bitcoin while I was having up, excuse me, on my chart while we're talking about it. Just give me 1 second. Okay, now I'm gonna look at one thing while we're doing it here. It's one thing that I'm worried. I'm gonna get rid of some of these lines. Those are just moving averages, which aren't as important right now. But let me just look at one other chart while we're, I'm gonna do an add. Hold on. Oopsie. Oh, what happened there? Excuse me 1 second. My thing just froze up. This will only take a second, but there we go. Okay, now, oh shoot. Okay, let me do it again. Sorry about that. XBT, currency. Okay, let's look at I'm going to look at what's called a MACD chart. Now, this is going to be really key right now. Now, obviously everybody knows what's going on. Let me get rid of some of these lines. No, first of all, let me explain again, trying to use the educational aspects of what's going on in the markets. And one of the things I like to use is called the MACD charts. And it stands for moving average convergence divergence. So not that, but this MACD chart, and what it is it's very much like the what we call death cross and golden cross. And if you're familiar with those, a golden cross is when the 50-day moving average crosses above the 200-day moving average. And that's usually seen for many assets and many stocks. That's usually very bullish because it doesn't give you a bottom, because it takes a while for something's declining. It takes a while for those moving averages to turn up. But it confirms when a 50-day crosses above the 200-day, it confirms that this trend has changed. And that's a golden cross. And what they call is a death cross is when the 50-day moving average crosses below the 200-day moving average. And that is obviously considered very bearish. But again, it doesn't signal a top. It usually happens after a market has already been going down for a while, and it's called a death cross. And it's important to look at ones. It's not always a perfect indicator, like all indicators, but it's a good one. Now here's a very similar thing, but it's on a shorter term basis. And this is using the 9-day and the 12-day moving averages, actually the exponential moving averages, but it's still what you get the basic idea. It doesn't see how this thing here, it started rolling over. See how the cross took place? Let me see here. See how this cross took place a little after the top? It didn't hit it right there at the top. It was a couple days later, because it takes time for those things to roll back over. Let me get that out of the way. Okay, now, but look what has happened in the last couple of days. Sorry, this year. Every time we've had a negative cross. See, it had the negative cross there. Look what it did. It kept going lower in a big way. Had a negative cross here, fell out of bed. Negative cross here, down for a couple of weeks. Okay, and last year, of course, we know what happened. Boom. Saw the negative cross here. It went sideways for a while. Okay, but again, a negative cross, etc. These negative crosses. Okay, now, of course, if you get a good, the other thing though is that really concerns me about this, because really we have to look at these Bitcoin, these cryptocurrencies much more on a technical basis, because nobody really knows exactly how to value them. But now here, look at the positive cross. There's a positive cross there. Yeah, it stopped going down, but didn't go up. It went sideways. Okay, positive cross there did work. Okay, but the last time it didn't. And then here, same thing. We got a positive cross, and it's really just gone sideways. We've had 2 positive crosses only sideways. And what we've had here is we had a negative cross here, a negative cross at a lower level, and this one looks like it's going to happen at a lower level again, if it does. Okay. If this happens, and I don't, again, we're below 20,000 again, but only slightly. But see how we had the last couple times, kind of a sideways thing right there. I'll move it. Let me zoom in on it. Let's do this here. kind of sideways to lower, but finally flattened out, then boom, lower, then flat sideways. Whenever you get in a sideways range, whenever it breaks out of that range, it moves in a big way in the direction of the break. If it breaks to the upside, it'd be up. But this one, so we had sideways, broke down, sideways, broke down. Now we're bringing sideways again. We're at the lower end of it, and we're about to see, or getting close. When I say about to, it may not happen tomorrow. It may not happen for a couple of days. It may not happen at all. But if it does, it's going to be really bearish on a near-term basis. I say really bearish. On a percentage basis, this thing's going to fall into to 15,000 pretty quickly.
What could happen to that? What was that company that got that big loan on this stuff?
MicroStrategy.
Yeah. So
they're big trouble, big trouble if that happens.
Yeah. So what can happen here? Can you just get like a flash crash or what?
Well, one of the things that happened, and we were able to take advantage of this, very interestingly enough, is that what happens, and again, this is when I talk about the educational part of it, is and I'll find it, but I don't want to go through my thing yet. But the reason, remember, okay, this was back in March, okay, when the last time the Bitcoin got hit so hard, right? And let me get out of here. And then people got, so this is when we got, wait a minute here, I apologize. Let me see it, 1, 2. Just give me 1 second here. I just want to make sure I give you the right information. I don't want to give you the wrong information. Okay, now, I'm sorry, it was May, not March. May, see, this is kind of the flash crash. I don't say crash. It started crashing there. It dropped from 40 to 30 in overnight. Okay, so what we did, and the same thing, you can see, same thing happened in June. And what I noticed at the time, and I want to pull up Apple Computer. You say, Apple Computer, what the hell does that got to do with Bitcoin? Well, what happened here in June, especially in June, you can see it in May. See what happened here? It's like, well, wait a minute, are they correlated? There's a reason they're correlated. This is the educational part about it. And I remember from my years back in Solomon Brothers, again, when I said I covered those desks, I worked for I don't think I mentioned this, but I worked at Solomon Brothers, which was the most important trading desk in the 70s, 80s, and 90s. I'm sorry, yeah, 70s, 80s, and 90s. I wasn't there in the 70s, but I was there in the 80s for 15 years in the 80s and 90s. Then Merrill Lynch's institutional trading desk, covering those same accounts for 10 years or almost 10 years in the 90s and into the 2000s. And when I was there, especially at Solomon Brothers, I saw what happened when there was a big thing called long-term capital management. They owned all these bonds, these esoteric bonds, and they got major league margin calls. And when they got those margin calls, there was no liquidity in the markets in what they owned. They couldn't meet their margin calls when they happened. They couldn't sell enough of their bonds to meet their margin calls. So what did they do? They sold what they could sell. And at that time, it happened to be the stock of General Electric, which was the biggest and one of the most important companies in the world at the time. And not anymore, but it was then. What happened this time? And I saw it again. I saw, look at Apple. Why is Apple getting clobbered? There's no news on an Apple. The stock was down over 10%. No news. And I finally, and it didn't take me long to figure out, I think this is what's happening. The same thing is happening what happened long-term capital. So many of these, Bitcoin's pretty liquid, but even that's not as liquid as it needed to be to meet those margin calls. But especially some of these other, whether it be stable coins or other cryptocurrency markets, Ethereum, et cetera, people could not sell enough to meet their margin calls. So what did they do? They went and sold their stocks. And I thought to myself, what would they own? These people aren't buying Boeing, okay? These people are young people, high-tech people. They're looking at cutting-edge things. And you know what? They're selling their Apple computer to meet their margin calls. And that's exactly what they were doing. And right here at the low, we came in and bought the Apple calls because we went for a one-day. Apple kept going down, but I saw that Bitcoin had stabilized at that 20,000 level, and I'm like, this forced selling, the margin calls have ended. Apple's going to rally, and sure enough, they made over I think it was over 500%. I'd have to go back. We'll look at the things, but in other words, these are the type again. So number one, we the kind of educational things we try to use to take advantage of with 40 years experience in the business, where I was able to take what was going on in the cryptocurrency market and profit in the stock, in the options, the call options of Apple Computer. But but to go back to what Rodrigo was asking, I apologize, I got off on a tangent there. But to go back to what Rodrigo was talking about, these guys are going to be in trouble. Is it Mr.? I think it's MSTR for MicroStrategy. Let's just make sure. I mean, MicroStrategy. Let's just look at the chart on that one. Now, here's a company that, they've gotten away from their business. Now, here, they've been in a sideways change. They took out a $500 million loan to buy Bitcoin. And now he bought it at lower levels, but he's already had to meet a couple of margin calls. This thing breaks down. People were saying, well, if it gets below 21,000, gets below, I don't know what the level is. There was all sorts of rumors going on Wall Street. I have no idea. No idea. All I know is that if that happens, they're going to have to sell. So you're going to see some more selling. I mean, some of the big big cap tech stocks are going to sell, have to go down because these people will get further margin calls. Now, having said that, a lot of the leverage, because it's come down so much, a lot of the leverage has been wrung out of the cryptocurrency market. So to be honest with you, I'm not, the problem is, it could go down to 15,000 rather quickly. That's 25%. That's a big move. But at the same time, I think we're much further along in the unwinding of leverage in this market than we are in several other markets, including the stock market. So there's going to be a time, again, the right ones, and everybody's making the same call, but I think everybody's right. When everybody's saying the same thing, I always get nervous. But I do believe that they're right when they say that this is much like the internet stocks of the late 90s and early 2000s. The ones that survived did unbelievably well, with Amazon obviously being one of the best examples of that. There's going to be, but the thing is, there are hundreds of dozens of active cryptocurrencies, hundreds and even thousands of ones that actually exist. And they're not going to be, there's only going to be a handful that are going to survive. And the ones that survive are going to do very, very well, just like the ones who survived the internet debacle will survive. But I think they have more downside. But luckily, I think we're further along in the deleveraging process in this one than we are in the stock market.
You don't really think that there's a possibility for, let's say, Bitcoin, like under 10,000?
I don't think so, but Jeffrey Gundlach, who's they call him the bond king now. We placed Bill Gross as the bond king. That was his call within the last 2 or 3, maybe certainly the last 3 weeks, maybe a month ago, but I don't think it was that long ago. He said he thought it was going to 10,000. He's a bond guy, but he's a very smart guy, and he understands leverage. He understands the unwinding of leverage. And he understands how a lot of different markets work. And even though his expertise is in the bond market, he's made a lot of good calls in a lot of different markets. So he is. So for somebody calling for 10,000, you got to be somebody that's consequential, that's smart, that's successful. So it's something you have to be careful of.
Right. And so whenever there is, if you do believe in the comeback, of these technologies, then you will be looking at these charts at this and Ethereum, right?
Oh, absolutely, and I like Ethereum even better. I just think it's just more practical uses. But I'd definitely be something that we'll be looking at. And the other thing too is that even at times when you look how oversold this was, okay, and especially you get some of these ETFs, you get a little bit. Maybe you buy the problem is you want to be able to, you have to stay in liquid names, because if you're going to use the options, you got to be able to use ones that are liquid. Whoops. Things kind of freezing up there. Sorry. But let me just try one more time. But see this little move here when it's got really oversold? Okay. Look at this. Okay. This is MSTR, but it got very, very oversold. The stock rallied 68%. It barely looks like a blurb on the radar screen. 68%. So believe me, there are going to be some opportunities, even if it heads down to that 10,000 level. There's going to be some opportunities on the buy side, just like there has been on both sides in Bitcoin for the last 5 years, or 10 years for that matter. So anyway, the couple of things. I mean, I just want to talk about, if we just got a second here, and sometimes I get too caught up in this, but I do want to talk about my view of the market here going forward. Now, the key thing for me is that too many of the bulls think that we're going to return to what we saw in 2021. And they're like saying, as long as inflation pulls back a little bit and the Fed pulls back a little bit, is just less hawkish, everything's going to be fine. And I totally disagree. The only way we go back to that is if we go back to massive liquidity program. Okay. That's the only way the stock market got to 22 times earnings, because there was just too much, there was massive amounts of liquidity. It had to go somewhere. Okay, that has been pulled out. Now you could say, these people say, well, the Fed's they're gonna have to reverse course. Well, if they reverse course, history shows that they're not going to do that until something breaks. And if something breaks, the stock market is going to be a lot lower before that happens. Okay, so yeah, if you think something's going to break and cause them to completely reverse and go from tightening to accommodative to loosening in another QE program, if that happens, it's going to happen at a much lower level. So that's not a reason to be bullish. Okay, and it's certainly not a reason to say, oh, don't worry, they may only be raising rates by 25 basis points. That's fine. That will be less bearish, but will not be bullish, because the stock market, every bear market of the last 50 years has gone to undervalue. Okay, and even every deep correction in the last 10 years, and I think every deep correction of the last 50 years as well. But what do you go? Deep correction, bear market, whatever happened to be, the market doesn't stop going down at 17 times earnings. It goes down to 15 times earnings or less. 12, 10 times earnings. Okay, we're at 17 times earnings, and that's before any of the earnings have been cut. Any of the earnings forecasts have been cut. Markets do not bottom. Bear markets do not end at 17 times earnings. Okay, so the market will have to. We're still in a process of revaluing the market. The first half of it. Some other people are starting to say this now, but I've been saying it since the beginning of the year. The first thing is going to be, we have to revalue to the change in Fed policy, because we no longer have that massive liquidity. And that means no more liquidity for the stock market. It also means no more liquidity for these venture capital firms and these private equity firms to give to all these startups. Take it back. They'll have some money. They just won't have anywhere near as much. That's going to hurt the economy. That means they're going to hire a few people. Heard it today on CNBC, where people are saying, hey, all these startups are starting to fold. And the reason why Microsoft and Intel and Meta and Facebook are not hiring people is because they know that they're going to get some really smart people from these that are leaving these startups to come work for them, and they're going to lay off the lower end of their what they call the dead wood in their companies, and bring in these really bright people who are going to leave these startups. But that's just less employment. The whole thing is negative for the economy, negative for the market. But the market had to come down, whether we had a pickup in inflation or a slowing economy, the market had to come down, because you don't trade at 22 times earnings. And this stuff about, especially because interest rates have gone from 0.5% to 3%. Okay, you don't have 22 times earnings. You got to go down to pre-QE, and you find that the real fair value is like 16 times earnings or 15 times earnings. Okay, but like I said, whenever you get a bear market, it overshoots to the downside. So and now, of course, the economy is slowing because inflation is staying high. Therefore, the market, the second half of this is going to be revaluing to the real level of the economy. Okay, so this is why I'm very concerned about the market. The other thing to note is that every single bear market or correction since the great financial crisis has only stopped after a major change in policy. And I just don't see the Fed doing that anytime soon. Now, again, if something breaks, I'll change my mind. But the problem is, if something breaks, it will happen after the stock market has fallen another 15, 20%, at least 10% in my opinion, at least the S&P. So so what am I talking about? Well, in 2020, what changed? Well, we had a major pandemic. The Fed came in and changed their policy with a massive QE program. Not just the Fed, but all the global central banks, or most of the global central banks. Massive QE program. That saved the day. In 2018, we had a 19% deep correction. What saved the day then? Only a change in policy. The Fed went from tightening to, remember, they pivoted and quickly went to neutral and then started easing again shortly thereafter. The whole thing there, again, people said it was because the stock market went down. No. It happened because something broke. The high yield market broke down. The fixed income market started freezing up. That's why they did it. That's one of the big concerns. People are saying, the credit markets are acting so well. Yeah, I hate to say it, but that's a reason to be bearish, not bullish, because that means the Fed can keep on tightening. Nothing's broken yet. That's the same thing happened in 2011. That was during the European crisis. They bailed out the Greek banks. And then, as I've said many times, they didn't really bail out they didn't bail out the Greek, they bailed out Greece, not the Greek banks, they bailed out Greece. But the real reason they bailed out Greece, the European Union bailed out Greece, was because they had to bail out the European banks, who were loaded to the gills with the Greek debt. And if Greece defaulted, a lot of these banks would have been in big trouble. So again, that was the ECB stepped in there. Sorry, the EU and ECB stepped in there. That was the Fed in 2018 and 2020. In 2009, the Fed had been supplying massive amounts of liquidity, but because it was such a major crisis, that wasn't even helping. What changed was a big change in policy when the regulators came in and said, you no longer have to mark your positions to market. You just come in, every single night they say, oh my gosh, our assets are down, the value of our assets are down again, so we've got to we've got to sell more stuff so that we can have, keep our balance sheet in line with what the regulators want. They said, no, you no longer have to do that. The selling stopped. The liquidity finally was able to help the market bounce back, and then we did more liquidity programs, et cetera. QE1, QE2, QE3, quantitative. What is it called? Quantitative. What was that? Operation Twist. OT. Operation Twist was another one. So they did all these things. But the point is that when the market gets going like this, you need something to change, and nothing has changed. I don't see things changing on the horizon. So I really think that we're going to see a lot more volatility. I think this rally we've seen recently is a bear market rally. After the last couple of days, more people are starting to worry about it. But let me just show you what we're looking at right now. Now, tomorrow we get the big number. There was a rumor out today that they leaked the number on the CPI. It's going to be over 10%. I think somebody was just trying to get, I think that was a bad rumor. I just think, did somebody, again, will anybody get in trouble for it? I don't know, but that, again, maybe it's true. Maybe we'll find out that it was leaked, but nobody, when we started this meeting, everybody was saying it was a false rumor. We'll find out tomorrow what the number is going to be, higher or lower, I don't know. But all I know is that what we have here is a key level, and I talked about this last week in the chat room and in my newsletter, the Maley report. We have a key. See, this was an important support level. We got down to this level, bounced back, but then when we broke lower, we just got crushed. So this old support became new resistance. We got up to it in late June, failed. Got up to it early this month, failed. So this is 3,900, and again, 39.01 isn't enough to get excited about, and even 30 right now, we're at 38.18. It's not breaking up. We get much more downside. It's going to show that this thing failed and we're headed lower. So we're at a key technical juncture in the stock market. The NDX is facing a similar critical juncture. Whether it be the CPI number tomorrow or the earnings this week and in the next couple of weeks, we're going to have a lot of activity going on, because this isn't going to bounce around here for very long. It's going to either break out or break down. Right now, it's looking like it's going to break down.
Right. Okay. So we have about 15 minutes left here, Matt. So maybe I'm thinking we could get some tickers from the chat, and then we can kind of, wrap things up there.
That's good.
But keep in mind, guys, if you do want to trade, before we do, put a couple of tickers in the chat, folks. But just keep in mind, if you do want to trade with Matt, Matt shows you his strategy, how he uses it, technicals, fundamentals, all that stuff. We are going to put in the link in the chat for you guys to join Matt. There's a 7-day money back guarantee. Keep that in mind, and you get a free laptop. So go ahead and put a couple of tickers. Matt's going to review them. And
while you're doing that, I might as well put one in while you guys are putting some in. Everybody likes Tesla. I'm a little worried. Not saying worried about that. I don't have it. Usually Tesla, it's like, oh, this is going to be exciting stock. It's been caught kind of in a range a little bit here. You see it's been caught in a range. You could also say it's a symmetrical triangle pattern. But I just think there are going to be other stocks that are going to be better plays here. I do think that this whole Twitter thing is going to be it's a bit of a fiasco for Musk, and it's going to keep give it another headwind. My favorite comment this morning, he said he came out. This is not. I'm not making any political comments about Donald Trump, but what he said was like, Donald Trump should not run because it would give us too much drama and wouldn't let people focus on what they really should be focused on in 2024. And I'm like, You're the last person in the world who's talking about too much drama. You got too. It's yeah, you're probably right about Trump. I'm not talking about Trump. I'm talking about Musk. It's like, how about you? There've been more drama surrounding you and this whole Twitter thing. Why don't you stop tweeting and all these things? But anyway, so this one right now is, again, as you see, between 800 here, but I'm just going to put it real quickly. This is what's called a symmetrical triangle, and boom, boom, on there. See that? And then, I meant to do that yellow, but we'll just do it white. And there. That. See that? It's even that, it's a little tough, but you can see if it breaks out one way or the other, it almost even looks like a sideways range. It's a wide range, but I just think he's going to have a tough time breaking out to the upside. The whole market's going to have to go for him to do that. And if the market does break down, the stock could get hit pretty good, I think. And we've been talking in the chat room with some people with $450 targets on it. Some well-respected technicians looking for it to drop as low as 450.
You know, that Tesla is definitely one of those companies that when people will buy it whenever it's like it's just a good stock that, to look into once everything is over.
Oh,
right?
yeah. It's a great trading stock. It's just literally in the last couple of days, I'm like, I'm just going to stay away from it until I get better. And that's the one thing, is you can't force it. Sometimes when you look at all these moves,
Just gotta wait.
It's like, okay, let's let it tell us. It's not sure what it wants to do. Why we can't make it move. Let's just let it tell us what's going to happen. If something may come up where again, look at this RSI chart. It's right in the middle. It's neutral. Even if it was stuck in the sideways pattern, but it was oversold, I'd be like, well, we can still buy it. Maybe it goes to the upper side. But anyway, believe me, it's one we'll be trading that a lot in the next.
Right. Okay. Then we have Meta, Facebook.
Yeah, it's interesting how a lot of people, hearing a lot of negative things about Meta and on the fundamental side of things, where people, saying they don't care about Meta, about the Meta universe, whatever. And well, first of all, Zuckerberg is really convinced that that's going to be the future. But what he's done, he's just trying to take. And I said, beginning of the year, they were having issues, they were having problems, and he did the smart thing. He threw the kitchen sink at it. And I think that's what we're gonna see in this earnings season. A lot of other companies to say, let's just throw the kitchen sink at it because and get it out of the way. But he did it because he knew it was an election year and that there was a big target on their chest. And if they were doing really well and making lots of money, people running for Congress would have announced more and more investigations on them. But now that the stock is down flat on its back, nobody's asking for these things because they don't get any political gain out of it because they're not making gazillions of dollars like they used to. I think it's Zuckerberg's way of saying, we got some issues anyway, let's throw the book at it. We can, it's not like they're going out of business. And they did what Amazon has done many times. It's like, let's just do what we need to do. So a year from now, we're really coming out on the other side. So that's my kind of long-term thing, thinking that this is going to be a great buy at some point. But boy, a lot of people heard some negative things. Now, so the key thing we're looking at here on the upside, if it can break above its 50-day moving average, here it did it for a day, but you can see how it keeps breaking just a little bit, but can't quite get there. So really, until it breaks above that, it's been making, even after they had that horrible number, it's been nothing but lower highs and lower lows. Lower high, lower low, lower high, lower low, lower high, lower low. Looks like another lower high. I think we're going back down. If it breaks below this level, which is big 151-ish, it's going to go down again. You can see it's neutral on its RSI chart. So it's kind of, it's worked off its oversold condition. Now I think it's vulnerable again. So I'm not looking to buy this stock. Now, don't get me wrong. If it rolls over, gets hit hard, and we become very oversold, and we'll look at its Bollinger Bands chart. We'll look at its MACD charts and see a better time to buy it. So in other words, right now, I'm thinking I want to wait till it's either oversold or proves me that I'm wrong and breaks above the 50-day moving average. So I'm kind of on the sidelines thinking that if anything, I would make a bearish bet because I just don't like the way the stock acts. You haven't even sniffed a higher high. When you gap down on really bad news, you usually get some sort of short covering rally that at least takes you to a little bit of a higher high for a short time. That hasn't happened in this name. So that does have me very concerned.
All right. Yep. All right. Yeah. Then we have Next one, we have Baba
Oh,
from,
Alibaba.
yeah, from Michelle Morrison on the Zoom. What's going on, Michelle?
So Alibaba, it's interesting. This is a stock. We're trying to figure out what the heck's going on. I saw a very, very interesting debate today. They frequently do on CNBC where they put a bull and a bear, and two guys one guy in particular I greatly respect, John Rutledge, who was bearish on China and the stocks. But it was kind of weird. I didn't quite understand his argument. He kept saying, one of the things he kept saying is that Z is going to do whatever the chairman Z is going to do, or she is going to do whatever he can to make sure the economy is doing better by the time the elections come up in October, so he can be named emperor for life, or chairman for life, or president for life. And I'm like, well, then why wouldn't you be bullish? I didn't see him. And they asked him that, and he didn't really have a good answer for it. But so that's, and the other thing too is we've seen some interesting activity in the options market. A big buyer of the FXI calls. We've also seen some put buyers too. But my concern is, so I'm suddenly a little bit concerned, but it would seem to me that Z wants to make sure that his stock market is looking real good. And just if the stock, just because the China stock market is going up doesn't mean that the U.S. market will go up. And we just saw what happened last year. The Chinese stock market went down all year last year, and the U.S. market went straight up. So there's not a real strong correlation between those two markets. But what I'm looking for right here, it's made a couple of nice, finally, let's get rid of, it's made, there's so many lines on here. The purple line is its 200-day moving average. The others are the 50 and 100-day, but I'm going to take those out of there. So this is good. It worked off a little bit overbought condition, but see how, if I'll go back a little bit further, let's see if they show it here. Yeah, I see. Well, you see how it's gotten up to its 200-day moving, but you see it's higher, finally got a higher high, higher low, higher high, higher low, mini higher high. Right now we're making a higher low. It hasn't come down a lot. If it can break more meaningfully above that 200-day moving average and make a higher high, I think it's going to really run. And I think the chances are good that that's going to happen, because I do think that Chairman Z wants to make sure. You think, wait a minute, he's going to get reelected no matter what. Well, you have to worry about social unrest. This is not his first rodeo, so he knows that he doesn't want to take any chances. And if you break above that 200-day moving average, it'll be good, because it's already broken above its trend line going all the way back to when their bear market started last year. So it's a nice breakout of their trend line, break above the 200-day moving average. But I'm not going to, again, we made some money. I made this pick in the tier 2, and I still like it. But to get in and really get it going, it's going to break above this high about 125. You could break above that, is really going to run. But this is one, because I'm a little unsure what's going on with the politics there. I'm a little worried about it, because they did fine Alibaba yesterday. That's why the stock got hit. But let's see what happens on a fundamental basis. In other words, what I would want to do is that I like it here, use a tight stop. Because if it goes down, it breaks down much more from here. It's going to take away some of that bullish theme that lives in the stock right now.
For sure. Right, man. I mean, and what I do like here, man, is really your overall perspective, right? As a global equity strategist, right? That you really understand these economies. You've traded, you're a career man. This is 40 years in the making. And the fact that you have the trading and the strategist side to it, it's just a huge benefit. So, of course, big shout out here to Matt Maley. Let's see. We got another ticker here. Mundo, Microsoft, downside 247, question mark. Maybe.
Okay, Microsoft is one of my better calls. Whoops, let's go here. Now, I turned negative on Microsoft, and this goes back to, I call it right at the top, and I base it on one thing. It had nothing to do with the fundamentals. I'm going to get rid of these moving averages because they don't mean as much. So here we go. Here is the stock right here, right before Thanksgiving. They announced, I think it was on Tuesday and the Monday and Tuesday of Thanksgiving, he had sold 1/2 of his personal holdings. This is Mr. Nadella, the CEO. Great CEO. Nothing wrong with selling, making it sell, but he sold half of his holdings. A couple of weeks later, the stock bounced back up to its highs. He sold more. He sold a total of two-thirds, $374 million of his personal holdings, okay? Nobody sells 250, that much of their stock. People sell all the time for little reasons. $10 million to buy another house, or $20 million to buy a mansion in Hawaii, whatever it happens to be. You don't sell 2/3 of your holdings unless you think the stock's going to go down and it's going to stay down. Doesn't mean it's going to go down and stay down for a couple of years. I'm telling you. Okay. Doesn't mean anything is going to go down for 2 years, but it's not going to get back up to that level for a couple of years. Okay. So, and look how, I mean, he's already saved himself about $100 million by selling here instead of waiting. Okay. When insiders sell, Goldman Sachs, all those Goldman Sachs partners, they sold to the public and through an IPO in 1999 because they saw what was coming. Okay. 2000, the market crashed. Blackstone, they came, you know, the biggest equity firm, one of the biggest private equity firms in the world. They went public in the summer of 2007. What happened 3 months? They saw what was coming. They saw what was coming and they sold. They went public. Partners sold, you know, a lot of their stock, and you know they didn't sell all of it, but they sold a big chunk of their stock, cashed out, and you know the market got creamed. The same thing happened. Sam Zell sold his real estate company, commercial real estate company, right before the top of the. I mean, his whole life. Why would you sell that entire company? Why? Because he saw what was happening. He saw there was a crazy bubble. Mr. Nadella, in my opinion, I don't know why he saw what he saw, but he saw something. In my opinion, that's anything wrong with this company. He said the market has been pushed way beyond its fundamental values. The Fed is now telling us that they are going to crack down and they're going to reverse that policy. I'm going to take a big chunk of money off the table. He did nothing unethically, wrong in any way, shape, or form. He's a great CEO. He's not the one who pushed the stock up. Believe me, if they came out and announced that they were under investigation by the Defense Department or something, or you know, by the Attorney General of the United States, then he would say, whoa, this guy needs to go to jail immediately for fraud. He's just saying, hey, my stock's overvalued. I see what's coming from the Fed. I'm going to cash out. And believe me, he's going to get more stock this year. He still owns a bunch of stock, just like those partners at Goldman and Blackstone. They own stock, continue to own stock, but just a much smaller position. And he's going to get, and all those Goldman guys got more stock over time, and he'll get more stock. He has turned that company back around. I mean, they were one of the leading companies in the world. Then they fell on, I'd say, hard times, but they drifted from that leadership position for almost a decade, and he's brought them back. He's done an unbelievable job. But that's one of the reasons why I call it. Now, through that long thing, what the heck happened today? Stock, I mean, I guess it was downgraded today, but you know, this whole thing that they're talking about with currency. Remember back when they initially mentioned this in June, everybody's saying, oh, don't worry about currency. It's like, what do you mean don't worry about currency? That's part of the fundamental picture. People, analysts always talk about when the currency issues help them. Why does it not matter when it hurts them? Well, it does. And this stock's getting hit. But again, this is another one that's had it's already had a lot of the froth pulled out of the stock. But I think this thing is going to go below 240. And let's look at the thing here. Remember we talked about the MACD chart? Let's see, let me try it again. Remember the MACD chart? Remember it's kind of like the golden cross and the death cross. Let's see here. What is wrong with this thing? MSFT. Equity. Let's see if it comes up. Okay, good. There it goes. Now here we are. So again, I'm going to get rid of the. Here we are it's curling back over. Now we haven't seen the MACD cross yet, but see how much it went down with that MACD cross, that MACD cross, that MACD cross. Here we got a bunch of, we could get a head fake in here. I mean, even that one would turn into but this does not bode well. I think we're going to get, again, it almost made a higher high, couldn't quite get there, and rolling back over. It's slightly lower low, but see, it goes down here. I think it's probably going lower. It's a great company. This is going to be, when this bear market is getting to the towards the end, it's going to be one of the unbelievable buys. And Mr. Nadella is not going to be selling stock. And remember that. Well, just go to that other. Gosh darn it! What's wrong with this thing? Yeah, looks like we've used it so much. I've lost my. Anyway, I'm sorry, but this, go back. Remember, there's another thing I want to talk about before. I think we're probably going to wrap up here. We've been going on for an hour and a half or so, but this is my feeling. I do think we're going to go to new lows. Oh, that's what I wanted to do. Hold on. Equity. Okay. Now the stock is still trading at 28 times earnings. You might think, well, that's really cheap for a stock like Microsoft. It's not crazy expensive. And a lot less expensive than it had been, but it's also not very cheap. So it's probably going to have to, like I said, it's probably going to have to overshoot to the downside. Trading at 25 times earnings. Let's see here. Boom. Price, earnings, best. Boom. There we are. 26 times earnings. Let's go back in time. Look at, see, it's nearly not, you have to, the only time it's really been above that level, okay, has been while the Fed was applying all that massive QE. Even when Nadella was here and doing great things here, the stock was trading down in the low 20s or high teens. It's not cheap yet. So I think it's got to go lower. I'm sorry to say. Now, one thing I want to finish up before I get a last little comment on the general thing is just remember what has happened when I talk about my broad case about worrying about the market. Again, and it goes back to what we said about Microsoft and Mr. Nadella selling his personal shares. Again, he did nothing wrong. If he had been, if he had lied about their earnings and the stock went up because he lied, he didn't do any of that. He's a very good businessman. He was just smart enough to see, hey, my stock's expensive, I'm going to take profits. But look what happened in 2016. Jamie Dimon, who's probably the most important CEO in the world. Okay, I'm just going to go back here. We saw correction in 2016. Okay. Here we are, 2016, right in here. Now, that may not look like much of a sell-off in the stock because we had such a huge rally since then, but look at this here. It's a 22% decline in JP Morgan. This is not some tech stock where they flop around 20% all the time. JP Morgan, that's a pretty big decline. What did he do right here, right at the low? Okay, he announced. Everybody was worried about the banks. Remember that because it was only 4 or 5 years after the crisis. So they're like, well, okay, market's going down. This stock's down 20%. Are these banks in trouble again? Jamie Dimon came in and announced that he bought $26 million of his stock, not a company buyback. $26 million of his own money he put into the stock. Right? The stock made a low that day and didn't look back. Look what it did for the next 2 years, it went straight up. Okay, right there. 2016 to early 2000, 2 straight years. Basically, little blurbs here, but basically straight up. Now, okay, this is when this was down 22%, and the stock market was down 15%. The S&P was down 15%. Now we have the S&P just a month ago. The S&P was down 15% at that time. What did he do? And his stock was obviously down. What did he do? Did he come in and buy his own stock with his own money? No. He said, batten down the hatches. We got a hurricane coming. He said, it may not be a major one, but it might be. There's a big difference. 2016, he steps to the plate and buys $26 million of his own hard-earned money for his own stock. Instead of doing that here, he says, batten down the hatches, a hurricane's coming. So when one of the smartest guys in the world, smartest businessman in the world, and most powerful, et cetera, and has a view of the whole world because his businesses are everywhere. When he tells you to do that, instead of buying stock like he did down here, you got to be ready for volatile times. And we're going to take advantage of that. And we have been taking advantage of that this year in the chat room, and we're going to continue to do that as the year and year go on and beyond. So anyway, that's pretty much it.
Right.
Rodrigo, a good session. I hope that people found it helpful and enjoyable. And again, I don't mean to be the bearer of bad news. But the thing is, embrace it. If we embrace it, you'll be able to take advantage of it. And when you take advantage of it, you're going to make some money at it. And so when the market finally makes a bottom and everybody else is like, oh my God, I can't take it anymore, just get me out. We're going to be the ones buying, because not only do we have the money to buy it, we have the confidence to buy it. And confidence is such an important part in the marketplace.
Right, absolutely. Matt Maley, Chief Market Strategist at Miller Tabak and lead trader at the Benzinga Stock Picks Inner Circle chat room. Let's go. Thanks a lot for coming here, Matt.
Thanks, buddy. We'll talk to you real soon. We'll see people in the chat room, and good luck. It's going to be a really exciting time in the second half of the year.
All right. Thanks a lot for being here. I know you're a busy guy. I appreciate everything you do here for the community and the retail traders here, Matt.
Thank you, buddy.
All right, man. So everybody here, really quick, I'm going to show you the chat room. What's up, David? David, all the chat members will get the recordings. But if you guys have questions, I put the email in the chat to reach out if you have questions about the chat room. I'm just going to show you guys really, really quick how to use it for those of you guys that joined. Okay. So once you join, make sure that you check your email. You're going to get an email basically that says like laptop delivery, something like that. Make sure you open it, fill it out. It's a form, and that's the address of where we will be sending out the laptop after day 7. Why day 7? Because that is when, we do have the 7-day money back guarantee. That's right, David. You got it, man. So if you guys are members of the Inner Circle chat room, just reach out. We'll send you this recording. You have access to any recording. And of course, the Tuesday sessions that Matt does for the chat members, right? So once you sign up, you're going to get some welcome emails, and you can just pop in there, click those, go to the chat room. And once you're in there, this is what you're going to see. You're going to see 2 channels. You're going to see one that it's called the Inner Circle chat. The other one, it's called Matt's Important Messages. In the Inner Circle chat, everybody is talking, including the members and Matt Maley. So it's a 2-way street. And then in Matt's Important Messages, that's where only Matt can post. And this is where you're going to find clear entries, exits, contract price, expiration, everything that you need to make the trade. Keep in mind, you're doing the most simple type of trade possible. You're buying a call and you're buying a put. And then you're just closing the trade. It's very simple. It's the same concept as buying a stock and then selling it. That's exactly what you're doing, but you're buying a call and then you're closing it, or you're buying a put and then you're closing it. Very easy and simple to follow. And that is why this chat room works really great, because you don't have to scroll through a bunch of messages to find the trades. All you have to do is pretty much just see where Matt is, right? And if it's a small position, a medium position, and all that sort of stuff. So keep in mind, there is a session every Sunday. Every Tuesday. It's, I believe, 11:30. That's when it begins. Finishes about 12:30 or so. Basically, you're going to be with Matt for about 1 hour, going over trade ideas, setups, just market updates overall, adjusting the portfolio, and also education, right? As you guys requested. The other thing is that just make sure that you're there throughout the day as you're trading, because these calls and puts can move pretty quickly, and you want to make sure that you take max profit and minimum losses. And for that, you have to be looking at Matt's moves. Is he buying it? Did he sell it already? Did he move on? Did he take the other side of the trade? So just something to keep in mind. And good question. So for the next year, it's going to renew at the same price. You don't have to worry. There's not going to be like a price hike, nothing like that. Mike, you're welcome, brother. I always see you here, man. So appreciate the love, brother. Perfect. All right, 1 second, folks. Baki, what's going on? Okay, so I put the link there in the chat. This is pretty much, the main uses right there in the chat room. Let me show you the Inner Circle chat, where pretty much everybody is, sharing trade ideas, education, research that they're finding, how to work trades, all that sort of stuff. So keep in mind, you can also bring your trade ideas, setups, and discuss them with Matt Maley, right? As you guys do that. So I think we covered most of the questions here, guys. I want to thank everybody, all you guys, for watching. Make sure you're staying safe, trade responsibly. And for those that joined, I will see you in the chat room tomorrow. We do have a big number with the CPI and all these other numbers that are coming out. And believe me, we are going to be trading the volatility. That's what Matt Maley is a specialist at. The more volatile it gets, the more juicier the calls and puts get when we're trading these. So just make sure that if you're joining, keep in mind, you do have a 7-day money back guarantee. And tomorrow is going to be a pretty insane day. So I would suggest, honestly, from one person to another, right, knowing that you have the money back guarantee, is to join, trade this week and next week with Matt, and you will get a really good sense of what we're doing in the chat room. And you're going to witness it, everything, right? And any questions, reach out. Thanks a lot, folks. We'll see you in the chat room tomorrow. Have a great day and stay safe.